How's it, guys? Hope you're doing well today. Today we are discussing your different investment options with Discovery Invest. My name is Nelson De Silva. I'm a certified financial advisor with Discovery and 1618 Financial Services. I also head up NDS Wealth and Wellness Coaching. And yeah, let's jump into it. So in today's video, we'll be looking specifically at discretionary investing, investing for non-retirement purposes. Four main products that we're looking at are endowments, core flexible investments and unit trusts, tax-free unit trusts, and then lastly our guaranteed plans, guaranteed growth plans, and guaranteed income plans. So let's jump onto endowments and the ins and outs of them, and we'll go through them one by one. Endowments offer fantastic tax benefits for those investors with a marginal tax rate of more than 30%, as it reduces your tax payable on the investment growth. It also helps you to save with discipline because it is a structured 5-year plan. There are certain restrictions within that period. We're allowed to make one withdrawal within that 5-year period, but the idea around endowments is that it is a longer term, 5+ years investment horizon. We can either make a lump sum contribution into the investment, we can make regular ongoing monthly contributions. We can choose from a number of different funds, close to 200 different fund options, from equities to bonds to property, offshore assets, etc. So when it comes to the main benefits of an endowment, and those of you who should be looking at endowments as an investment vehicle, the main things to consider if you're wanting to try and mitigate and reduce any estate planning fees and executor fees, your endowment is you as the client or the life assured. So should you pass away, those funds will get paid directly to your nominated beneficiary. It won't get tied up within your estate. So if those funds are with your bank account or unit trust or any other kind of savings or investment vehicle, the money would get tied up and frozen within your estate and eventually pay out to your beneficiaries according to your will, but that process takes a bit of time. Whereas your endowment, we've got a beneficiary, you pass away, the money gets paid directly to your beneficiary, bypassing those executor fees that would be payable on your estate. So next up, unit trusts. So unit trusts, or flexible investments like I like to call them, is literally that. It's a flexible investment. There's no term to it. There's no period. There's no restriction. We could literally invest today and withdraw the money next week. Also, either invest a lump sum or we can contribute on a monthly basis to build up a lump sum and then to reinvest it, settle some debt, reinvest in a business or property or whatever it may be. So the longer we invest, the more the effect of compounding interest. So you're taxed in your own hands when investing in a unit trust at your current personal tax rate, and dividends within the unit trust are only taxed at 20%. When it comes to estate planning, and should you pass away while you've got a unit trust or a flexible investment, the same sort of rules will apply as if you had that money sitting in the bank. So the assets get frozen within your estate, they'll get wound up and eventually pay out to your beneficiaries according to your wishes and your will. Another unit trust structure is a tax-free unit trust. So literally that, there's no tax implication whatsoever on the tax-free investment account. So we're allowed to put away as much as 36,000 Rand for the year into a tax-free investment vehicle, which works out to a maximum of 3,000 Rand a month. The idea with these tax-free unit trusts, we should look at it as a long-term savings vehicle. The effect of not paying tax within that investment only really kicks in over 5 to 10 years, where the effect of that tax, again, starts to compound over time. So the longer we let it run, the bigger that benefit of the tax-free incentive. And then last but not least are guaranteed plans. Like the name says, they are guaranteed over a 5-year period. So either a guaranteed growth plan where we're investing a lump sum, and based on the rate, we know that in the next 5 years, we're going to come out with X amount guaranteed. We know that's what the figure is going to be at the end of the 5 years. Or guaranteed income plan, where you might need a fixed stable income and know exactly what you're going to be earning over this next 5-year period. Guaranteed growth and a guaranteed income plan works magic for that, where we need to have that certainty of knowing exactly what we're going to have over the next 5-year period. Also fantastic for estate planning as we can nominate a beneficiary. So should you pass away, the money and the proceeds from those plans get paid directly to your beneficiary and doesn't go through your estate and take a bit longer to eventually get wound up and paid out to your beneficiaries. So that's it, pretty much short and sweet. Just a quick overview on the 4 different investment structures. We've got our endowments, 5-year plus term, tax efficient for higher income earners, paying tax of over 30%, works fantastic. We can stipulate a beneficiary, so should you pass away, the money gets paid directly to them. Unit trust and flexible investments, easy access, quick withdrawal in and out. We can have it monthly or a lump sum into those unit trusts, taxed in your hands, so there's no tax incentive on it. The tax-free unit trust investment is literally that. It's a tax-free structure. We can still access as and when, but my advice is the tax-free investment account should be left for a longer term that we should invest into. Forget about it, create another little kitty that we can access for those emergencies. And then finally are the guaranteed plans, literally just that. We guaranteed for the next 5 years. We'll know exactly what we're coming out with at the end of that 5-year period, whether it's an income that we're drawing or whether it's a lump sum that we're trying to grow over the next 5 years. If you enjoyed the video, got any value, please do like it. And if you want to see more, subscribe, hit the bell notification to be alerted of the next video. And I'll see you guys in the next one. Ciao.